Hello and welcome to FX Addicts Weekly Market Analysis. This is Tim, the Currency Professor, and today is Friday, August 23rd, 2013. Kind of a volatile week this week, and did make some movement, did do some technical things. First, though, let's run over some of the economics for the week. No major big deals during the week, with the exception of today, which had in the U.S. new home sales came in at 394,000. That's the lowest we've seen in a very, very long time. Expectations were for 490,000, so almost 100,000 below. And last month was 455, so very, very big difference there. And then on a month-over-month basis, they were down 13.4%. So that, I think the market is really viewing it as an aberration, as am I. Market did move off of that. The dollar sold off critically, but has since recovered a little bit. And everyone's kind of thinking this is summer doldrums, and that number is just too bad to be true. In the UK today, GDP came out a little bit better than expectations, 1.5% as opposed to the 1.4 on the original report, and on a quarter-over-quarter basis, 0.7% increase as opposed to the originally reported 0.6. So that's positive. Unfortunately, it's not really helping the pound at all. So, but still a very good number considering that the UK has been hurting for the last few quarters. And in Canada, the core CPI and the full CPI came out. The core was a little bit less than expectations at 1.4%. Expectations were for 2.0. And on the full number, it came in at 1.3. Expectations were for 1.0. So a little bit better on the full number, a little bit worse on the core rate, and overall not bad, but combined with the weakness of the numbers, the economic numbers lately out of Canada, that's not really a good sign. So usually Canada's fairly stable in their economic stuff, and as of late it's been decisively negative. So even though this report is mixed, we're going to call it almost negative because of the recent economic news. All right, let's get on to the technicals here. The Euro-US dollar up 31 pips right now. We've been all over the place today. As you can see, we've had a nice run up here, but we're starting to lose some momentum here. We did run up this week and make some new highs in this move, and have since fallen back. We can see here on the stochastics too. These are higher pricing on lower stochastics, which is not really a positive thing. So it looks like from here we'll probably turn around and have somewhat of a correction. Now, how far? That's a good question. Technically, what should happen is we should sell off and go down to the lower end of this range down here around 127.50 area. So technically that's what should happen. There is an awful lot of enthusiasm and momentum though for the euro, so we may just pull back a little bit and then fire off again, go on up to that 137 level, and then turn around from there. That is a very good possibility. So on the monthlies we can see that too. That would almost build a double top then on our monthlies, and it would also show that we're probably running out of steam, because we would make those newer highs on much lower stochastics on the monthlies. Again, not a very good sign. Technically though, we're not seeing any real momentum here to really push this market and push it up to the upper end of this range, would be around the 142, 143 mark now. So longer term still looks negative. Right now it's consolidating with an upward bias, but there's not a lot of conviction to that. So at some point here we will turn around. Pound dollar down today, down about 22 pips, even with that good GDP news. Of course, we did have quite the run up here, and we did, as we had talked about last week, we're coming to this kind of point, and we have come to that point, and we have fallen off now. So we should see a decent correction, something at least down to around the 152.50 area. So we pull back for a little bit, come down, and then maybe make another stab up. If we look at the weeklies, we can see how this week we're going to end up negative with a little bit of a tail, so we should see several weeks where we go down here. It just depends with how much vigor we do that, and how the sentiment actually changes here. If we run out to the monthlies, we're still in the same range that we've been at for the last 6-7 months now, and really doesn't look like it's going to do anything more. We're still in this downtrend from way back here. We've consolidated. We've come out below this trend line quite decisively, so the movement should still be continued lower, and once we're done here with this consolidation, it should continue on to the lower 140s. That's what we've been saying. That's what we're anticipating. We'll have to see if this consolidates very much longer. Then we will need to go higher, but we're going to need to close well above the 165 mark, closer to 170, to flip this whole thing around, and that would take an awful lot at this point. US dollar against the Swiss franc down just slightly now, down about 21 pips. We were up most of the session and turned around on that US housing news. So here we are negative again, but it looks like we're probably going to build a base down here. We ran it down, we came up a little bit, ran down, formed this V thing, looked like it was going to consolidate and then go up from here. It did not. We broke and made new lows this last week. So now we need to test these lows, which it looks like we're going to do now at this point, which around the same lows back in here. So it should find some decent support here. Come down one more time to around that 91.50, 60 area, and then rally up from there. On a weekly basis, well, we can see here on the weeklies we're really starting to consolidate. We've got a couple of little tails here to the bottom, so could be a little bit of a positive. And on the monthlies, we're still looking for this market to really explode up out of here and close above these two very, very long trend lines, one going back about 13, 14 years, another one going back 3 decades. So once we close above that higher one that goes back about 3 decades, that would give us then some much needed momentum and a good boost to take us up to some very good, very long term moving higher type of movement. So really look forward to that. US dollar against the Japanese yen, down right now about 3 pips, or up about 3 pips depending on your quote service. We were up most of the session until that news came out again. It was looking fairly positive. We were punching above this this minor trend line here that we've peaked at. So it would have been a very positive thing if we could have closed up there. Probably will not do it today. If we can close positive on the day and close about 10 pips positive, that would be good longer term. Now on the weeklies, we can see we're stuck in this triangular range here, and we should rally up to the upper end, which is right now around 100. So we could rally up there probably the beginning of next week and then maybe fall off again. But we are coming to a peak there, so there is a very good possibility we could build that momentum and break above it. Once we close decisively above that range, we should go off and make new highs then. So if we could close 150, 101 area, then it should be kind of a no-brainer to run up to new highs. Now on the monthlies, we are positive now for the month, which is good, and that would signal then that we've had a correction, a minor correction, and that we would go off to new highs. So longer term, this market still looks very, very good, fundamentally as well as technically. Fundamentally, Japan's numbers, economic numbers, have been coming in slower, and it's a much different number than what we've seen from in the past here. So the first quarter, 2 quarters of the year did very well with the change from Prime Minister Abe coming in and making these changes, but it's kind of fizzled since then. So they're probably going to have to do something a little more to boost the economy and bring down the value of the yen. All right, Euro Swiss up just slightly right now, up about 4 pips. We were up quite a bit earlier, just fell back again on that news. So, but technically we do look fairly good here. We made some lows here. Now we're making another low here, so we've tested the old lows. Looks good. We've done it on higher stochastics. Really looks like we're going to move up from here, and we could move up quite significantly, maybe even running up to new highs. So if we just measure the distance here, that we go from here to here, and we take that and put that over here, we're very close to that level of same distance. So we're about timing due for another run up here. Euro yen up a little bit today, up quite nicely yesterday, up 35 today. We're back up above 132, pushing towards the upper limits now. And if we jump out here to the weeklies, we can see how that's really starting to play out. We could draw a line right across the top and then up from here. So we got kind of a ascending triangle here. We should break out to the upside. We need to get up to that 137, 138 level to complete this pattern. And if we look here on the monthlies, we can see how we could very easily run up to that. This month now, we got 1 week left, so it's going to be important how we close next Friday. If we can close at new highs or just above those new highs there, I'm sorry, just above the old highs, that would be extremely positive here. Then month of September, we could very easily rally up to that 137, 138 level. It still looks very good. We could turn around from here and go back down to about the maybe 125 area with a minor correction and then move back up. But overall, we still look fairly positive here. U.S. dollar against the Canadian. Well, we were up most of the session. Then when that news came out, of course, we sold off quite vigorously. So we're either up one or down one, depending on your quote service here. But we got this nice long tail going, which is not a good sign. If we close negative today and we have that tail, then that would signal a turnaround here. Of course, we have been up 6 sessions in a row, so a little bit of a turnaround here really wouldn't be a bad thing. We could correct it down a little bit and then move back up to new highs. So longer term, we still look good on this market. It's just making those nice building curvature type of patterns, building up to a real crescendo here that we could easily see this market boost way up 110, 112 very, very easily. When we look out here on the monthlies, we can see it even better. So looks very good longer term for this market to really kind of take off and make a very decent move. Australian dollar against the U.S. Up 24 pips today. We did sell off this week, and now we're just backing up just slightly, probably getting set up to take another fall. We really thought it would hold up in this area. We consolidated. We went down, made new lows with like a little V shape there, and then we figured it would consolidate out and then maybe move up. But really doesn't look like that at this point. It looks like next week we'll probably go down and make some new lows, which means game over. Longer term, look here on the weeklies, we take out those lows, we go down, we're really, the next stopping point is around that 80 to 82 mark. And that seems to be where we're headed. This market is very weak. Does not look like it's going to change at all. On a monthly basis, we're up for the month, but just barely. And we still got 1 more week left, so very easily could close negative again this month, which would make it 4 months in a row, and really signaling that this market is going to go further. So that is it for today and for this week. Hope you all had a good week trading. If you're not a member of FX Addicts, please stop on by. We do offer a 7-day free trial. I am available in the chat room all day and occasionally throughout the day in the live trading room as well. And you can always catch me via email, tim@fxaddicts.com. So feel free to contact me at any time. Thank you very much and have a good weekend.